Hi there, and welcome to the Early Bird. And here we're looking at the Australian market, the ASX 200, the XJO, and this is the likely pattern that we'll be following in terms of this move up through here as wave one, and then an A and a B and a C here for wave two, pulling back 61.8%, and then moving up from there. Now, as you know, I thought that the ABC correction, this ABC here, was actually in this section here, and then this would be up for wave one because we had 5 waves there, and we'll come back to 61.8% here and then move off from there. That was an option. This correction here is a little bit small in terms of proportion to this particular move up through here. This type of correction here would be more valid. However, there is the chance that this won't pull back to the 50-60% retracement level here. It may just stop at the 4.8 here, the 4,800. It's either, well, there's a few possibilities here, and the reason that it is a little bit tricky is because we're following the Chinese market and the Shanghai and not the Dow Jones over the last few days here. So it's got things out of whack a little bit. So there's a couple of options here, is that yes, it can pull back to the 50-61% mark here, and we'll have a look at the Chinese market there as well on this one. So that's a possibility, and we'll be looking at 5 waves for that there. So this would be part of the 3rd wave that we're in now. We'd still need to see a 4th and a 5th wave down. So we're at that low there, and a 4th and a 5th. So we may only come down to the 772 number down here. That comes up there, yeah. So the 772 here. So it may stop here at the 4.8. It may stop at the 4772 here. Or it will pull down further to the 4700 here. There is a little gap over here that should be noted because this market doesn't leave gaps open. Well, the SPY doesn't anyway. So yeah, we can be aware of that situation there. But I would think that this little 5-wave structure here that I've got here, I put this chart out on Friday, I think it was. But in the SPY section. But look, I think we're at that bottom of that 3rd wave there, and the reason I say that is when we have a look at that on an intraday level. We'll come back to this in a moment. Just have a look at this here. Right, this is the SPY here, and the reason I thought it was at the bottom of the 3rd wave here is because of the structure. So we've got like wave 1 down, wave 2 here, then we've got 5 waves down for wave 1, wave 2, wave 3, wave 4, and wave 5 here for the 3rd wave. So the 4th wave pulling back to this point here, and then the 5th wave down to down around this area here. So that's a real possibility. In terms of actually trading, then we need to see what occurs on the Monday if we follow the Dow up, or the Chinese market downwards. So in terms of actually trading here, the 4,800, then we've got group 1, which is 10, 20 and 30 here, and normally if support can be found on the 30 here, then we can look to go to the upside from that point there. And yes, it is above 30 there, but we need to see that settle in on the cash opening there. A move into and below the 20 here, the sort of center of the group 1 here, then it's likely to move back further down here and test that. So this is the bounce, and let's see if it runs out of steam or it can find support. If it finds support on the 50 here, then the run has started, and then we need to be long at this point here, because once this correction's over here, wherever that may be, from this point here, or from that 30 that we're just talking about in there somewhere, then this market will push to the upside. So up for 1, ABC for 2, and then we'll push further up through here. And the third wave is normally quite quick, so that will take that high out and move up through there. But I've taken it to the 5,000 because it will slow into that particular number there. So when we look at the Asian market, just to bring things in perspective a little bit, just bear with me while I search through here. We'll just go to the comp here. So major trading level is 3,000, and what we've seen over the last few days here is this drop off quite quickly through here. The 61.8 retracement level for this here would be into here, so we're looking around the 2008 here. There is support further up here, so this market here needs to basically find its support. I mean, we're following it, and copper is following it as well, and it needs to be support here. There is manufacturing figures coming out on Sunday actually, so we'll have a look at those. They can give us a bit of a pre-jump into what's sort of going to occur here, but essentially we need to find the support in this situation here, and this would also be a little bit like the 5 waves coming down as well. So as you can see here, this would be down for wave 1, back for wave 2. I think that this little 3, 4 in here is actually part of the third wave coming down, so we'd still be looking for something like that to occur here. And if that is 5 waves there, then what occurs is 3 waves to the upside after that, another retest back up here basically, and then another 5 coming down through there, and then up from that point of view there. So it's still a while to go, but one of the first things here is that because we seem to be following this market, we need to see support in here, and there will be support there at the 8 here, but it just means that we're going to have 3 days of maybe even a week, maybe even longer, depending on how it moves. But there is support in this section here, and we need to see that settle in and find support there, and then that will reflect back into to our markets. But I consider this a normal reaction to this level here. So it needs to find support, and then the battle of supply and demand will get in through there. But eventually, for this market to find support up through here. So we just got to watch this. If this gets out of control and comes back even further through here, and this 2.8 becomes resistance here, then we've really got a problem there. But as far as it goes so far, this is just a normal reaction from a major level, and we're looking for support in here, and it may take even up to a week to find that. It may be sooner than that, and we have been following the Shanghai market rather than the Dow Jones. So it's a bit sort of one of those sort of things, not sort of common, but it'll become more common, and we need to tune into that situation there. So with the Dow Jones on the opposite of all of this, things have pretty much unfolded as expected. We knew that we'd be going to 12,800, and we'll have a correction across here as well. So, but there is further to go up through here, because as we've been following this wave structure up through here, we've been talking about that all week. It's still unfolding to the upside. So from here, we'd have a wave 1 and a wave 2 into here. This is still all folding through here, so there's still more to come to the upside here. If I put this on a 4-minute chart just to drill in there, we can see the 12,772 there playing its part as resistance and then as support through here, and then the 12,8 playing its part as resistance, and now checking it in as support. But this is quite a big number here, even though we expect further upside here. I'd still bear in mind that this number here and this number here will still have more to play in all of this. But eventually, if this does find support, which if you look on our S&P 500 charts over the last few months, we've still got further to go. So the major trading level of 13,000 would come into play on this as well. So we're just really using this to go sort of intraday and daily in all of this as well. So new highs in the Dow there, and obviously this is the same with the S&P 500. And this particular wave count that we've been following up here is still extending. So and it'll continue to extend there. So look for support on the 60 here. If that's found on there, then you can start to work through group 2 here, the 65.72 and the 80 there. But all good there, and the Australian dollar is following this as well. So Australian dollar target is 110, still on track there. The FTSE, as you know, that we've mentioned that because it's coming into 6,100 here, didn't really have a sort of a strategy for that. This will still see a correction across the 6,100 there, but this is on an hourly bar here, but on an intraday level now, you'll see that we've got support within group 2 here, so you can start to look for long trades to the upside there, but be diligent because the market's going to bounce around the 100 here, so just be careful about that. Selling above it and buying below it and taking the money at the 100 is not such a bad strategy because it will cross it quite a few times. Some of the drivers that we're looking at, gold, traders are still swapping dollars for gold, and we're seeing gold push higher in line with this particular wave count here. So from the 1500, we're looking for 5 waves up. We're looking for the 1, the 2, 3, 4, and we're looking for 5 up into here, and this 5th wave here is the 1, the 2 to here. There'll be 5 waves in here, which is not actually finished yet, so that will finish in around the 72, if not higher. Then this 4th wave will be coming into play. That will be over there and up there a little bit, and this one will be sort of over here a little bit. So that will play out into that area there. But note here that this trend up here is expanding. You can see wave 1 here, the length of that. Wave 3 here is more so. Normally, if that's got the extension in it there, then this wave 5 would be the same as wave 1 in terms of time and amplitude, but it's not. It's also expanding as well. So it's growing proportionally. This here, wave 1, wave 3, and wave 5 will all have a 618 relationship. That's probably a bit simplistic, but it's basically still expanding to the upside there. Now, the oil market here, as you can see here, it's still edging higher, and yes, well, there's a couple of ways to count all of this. I've kept it as an A and a B and a C wave to here, and we're looking for that to top out at 115 there. But however, this can also be up for 1, back for 2, and a 3rd wave up to here, a 4th, and continue up there. So as mentioned, I just wanted to put the Elliott wave count aside. We did that quite some time ago on the early bird side of things anyway. And we're looking at the levels, and while it was above 1110, it was deemed positive. I know that this retest support on here at 111 is support, but also we've got support on this retest here of 12. But we don't really have a strong retest on the top of group 1 here, and that's what I was really looking for. Yes, the price is moving up through there, and yes, it can continue to move up there, but it's nice once something actually gets retested and then the price pushes away, retests and pushes away. So I was looking for that retest on the 13 there, and that's important to me as a group 1 there because it separates it psychologically from the previous largest number and is free to move to the upside. So it can still move to the upside here. So when it gets to the 15 up here, we'll see a reaction from here in terms of the classic trading levels pattern, or it'll have the overshoot. The overshoot is simply shooting over it and then coming back across it and then eventually working into it, and then we can move off from there. So let's see if this pushes higher here, and to see if it starts to develop a correction corrective pattern across here, then you'll know straight away that we start looking at higher ground. And of course, that would bring it from 1110, it would bring it in at the 120 here. But there's a long way to go within all that. The 15 is the midpoint, then the 18 is the profit taking. Halfway between the 5 and the 8 will be the 16, 5, 50 there, so that will play a strong part there. They all play a strong part there, but we'll see how we go if we get that lift off there. But using the levels here, we've been able to basically stay with the trend where the Elliott one would have had us out. So using Elliott and the levels together strengthens the not only the analysis but the trading side of things as well. Okay, the copper market is in line with the Chinese market here, so we were considering that this market was in a little bit of danger because of the 420 here being the last low here, and taking that out. So it really sort of takes us away from being in a positive pattern to a bearish pattern, and this can also unfold further to the downside here. So that's what I would imagine it would do. So we need to be aware of that. So the Shanghai market and the copper market is having an impact on our local market. It's very unusual to see the Dow Jones going up and our market going down. We don't see that sort of very often. So we'll see if that actually bounces back. And if it does bounce back, it will bounce back pretty quickly. And that's why we'll set some robo trades up for the long side on the weekly and the daily, and if they get triggered, they get triggered. If not, then we can clean them off the board there. We do have short trades out there at the moment from last week there on the daily side of things. And as you know, this week and coming back from Easter, I haven't put a lot of trades out because I haven't felt sort of confident in the markets. But we've had a few and they've been on the right side there, so that's okay. There's a time and a place for everything. So we just need to be trade less and be diligent at this point in time. But let's see how we go. And yeah, okay, getting on to the Forex here. As I mentioned in the when we're looking at gold, we're looking at the US dollar coming down and the gold going up. So that's occurring there, and also while this is going down, the euro is going up, and so is our dollar going up as well. Probably hedge funds hedging there against the US dollar. Now, right, so this market here, what occurred at 74 here, the whole number here, this particular pattern through here is a classic trading levels pattern, but just on the short side. So normally if a market was going up to a level through here, at say at 75, it would react from there, find support, and then move up above it and create the first high and all that sort of stuff. So this is the same, just in reverse. So when a market's coming down to a level or a big number, it come down, it will bounce off it. In this way, it's a three-wave correction here, and that's what we would expect if this market was coming up here. Hit this, would go an A and a B and a C wave here, a three-way counter trend correction, and then push up. So we've got that counter trend correction there, and then it continues to the downside, struggles a bit here, drop through here, and then it's this retest here. So the breakout, yeah, sure, it's important, but I don't think that it's more important than the actual retest here. We want that retest to fail. If that retest fails, then we push in from this market here, this trend through here. Your skill level will dictate how you play something like this, because once we recognize that this is a three-wave correction, you can actually start the game from here. So you can build positions in all over the place. It doesn't matter what you're doing, as long as you know what you're doing. That's the point. So it depends on skill level to be able to navigate through this level here. But this is a really nice example of a bearish situation and where you can move in from it, because if you took profits here coming down, scaling into this group 1 here, then you would want to wait for it to become resistance and start scaling in here. So what you've done is that you've saved yourself a lot of time, If you have the skill, then you can move in earlier from all of this. But yeah, so it just depends on how good you are, I guess. So the reason I'm harping on about this is because the same situation is developing here at the 73. So we're just looking for this to move through here, come back and retest this as resistance here, and then move on from that point there. And this is an important point here because the 73 here would be the opposite and equal to the euro being the inverse at the 148. So when we look at the euro at 148, here we can see the same thing happening here at the 148. So if we were going to go long on the euro here, which this could be the correction finished here in terms of the A, the B and the C wave here, 3-wave correction, so we can push up from here. Okay, that's our support there, but we need to see that move through on the dollar at 73. But just looking at this here on a smaller scale on a 2-minute chart, you can see that it's still moving down through here. Look, it may find support here. Don't forget about this number here, the 14772 here. If this fails to hold through here and we get a bounce on the dollar at 73 there. Now, if this market is going to move up through here, then in the bigger picture of things, this is all group 1 here, the 10, the 20 and the 30. So you'd want support on the 30 here, and the 30 would get you to the 50. Okay, like it did over here, I guess. But in this case, we'll be looking for a higher ground here. And if this found support here, you see how that's moved up through there? That's the breakout, but it's the retest that you want here. So don't chase that through there. Wait for it to come back. And if it can find support, it may come back through here and then back up there and back there and eventually find there and get support on there. Then you can move off from there. So the retest is more important than the breakout. So in this case, if this market is going to work up off the 148 from here, then you don't want to go long here. You want to go long on the 10 here. So you wait for it to get support on there. So it would be the push up and then the coming back on it and checking it for support. Yeah, finding support there. If you get that, then you can move up through here, take the money at this level, wait for support to get on here, and then trade to this level, get out, wait for support on this one, or you can trade right through them depending on what you're trying to do there. But anyway, just waffling on a bit. The Australian dollar still pushing higher to 1110 up here, a target up here. From here, from this little structure here, this would be up for 1, back for 2, and then we'll be looking for the third wave going up in terms of 1, 2, 3, 4, 5, but I don't think that's finished just yet because that would be up for 1, 2, 3, 4. I'm not sure about that, but what I do know, you see that pattern there, you see how that's in that correction, that from that high there down to here, see how that's in 3 waves, that A, B and C here. So that means it's corrective and new highs will be made above that. Now this can be an A, B, C, it can be complete. It can just be the A wave, this could be the B wave, and we can get a C wave in here, and then we move up. One way or another, first of all, we know this is corrective, so a new high will be made. We just don't know how big this correction will be here. So when we move in on this a little bit closer here, we can just use support and resistance here. There's that 3-wave pattern there. So we've got our levels in here as support and resistance. We know that the support now is at the 60, because that's 65 there. So that's all that volume there would be the support area. So any stops would need to be under there. And if you're going to go long here, then you'd want a really good support on the 70, but more so on the 72 there, just to confirm that. So you had support on the 70 here, but you really want it on the 72 there. So, but that's what the 65, the 72 and the 80 are for, to base support and, well, to navigate through them. But there's no right or wrong way to do anything. You know, taking profit at these numbers or using them as support and adding or subtracting and doing all sorts of things. But as long as you know what you're doing, but it's nice to work from a support there, and that's your support there. Your next support you want it to build on through here. So we know that it's corrective. We know that there'll be a new high made. What we don't know is this is going to be an A, B, C for the A wave, and then an A and a B for the C, and a C wave for another B wave. So if this is going to fail here and not find support, then we'll get a C wave coming down here, and a C wave will be in 5 waves. So we'll see 5 waves come down through here. But once that's complete, then we'll see a push to the upside, and that's the one you want to get. So you'll get the long trade from here on support, or you'll get it from down here. Okay, so using the Elliott and the levels together can be very helpful. Alrighty, that's it. So our markets are following the Chinese market, and we need to be careful about the Chinese market finding support here. Look, Monday, we may open on Monday and that there may be buying support at the 4,800, and we can push up and follow the US up. I don't know, but I do know over the last few days we have been following this, and now copper is in the same boat as well. So we need to see support in China before we're going to see support in our market here. So just bear that in mind, and hopefully we'll catch that run up. But just be careful with long positions until we've got support in this market, and we've also got it in our local market as well. There won't be much happening on the Dow Jones anyway. That will just be working into a bigger correction at 12,800. Okay, good morning and good luck.